Hello, everybody. Welcome to the Tuesday edition webinar Trade of the Week. Hello, Andy.
Hey, Steve, how's it going? Just me
Good.
and you today, huh?
Just me and you. Yeah, our marketing director, Scott, is unavoidably detained. Been a busy week. We've got some cool stuff to announce coming up. California, Carlsbad get-together for affiliates and also for traders. We're going to have a keynote speaker who, by the way, tomorrow night will be presenting. Brian Shannon at Alpha Trends will be presenting a webinar to our audience tonight. So if you know the name and you're not on that webinar email list, let us know and we can get something out to you to sign up. So thanks for showing up for the Trade of the Week. Again, I'll be your host and your intro guy. So this is a webinar. The audience is muted. We cannot hear you. However, if somebody wants to type into the questions box that you can hear and see us, that will help me move to step 2 of the presentation. For those that cannot make it live, we are recording this webinar. All right, I'm still waiting for somebody to let me know they can see and hear my screen.
Okay.
Okay, thank you very much.
There we go. Now they're piling in.
Okay. All right. Maybe there's a delay. Who knows? But appreciate it, Mike and friend. So, yes, this is the Tuesday edition of Trade of the Week. We'll go over a few things. And again, my name's Steve. I'm user number 3 in the Trade Ideas system. And helping me today is Andy Lindelof, who's user number 40 in the Trade Ideas back office system, which is pretty old school. I don't think you can get much more old school than that. So again, for those that can't make it, we will have a repeat video recording on our YouTube channel later this evening. But thank you for showing up. Real quick as we get into it, actually, I think we want to do something that we normally do, which is our polls. Real quickly, if you guys would indulge me, I'm going to launch this poll, and it is, oh, wait a minute, that's not the one I wanted. Are you in the open house trial? Hang on a second. That's not the one I wanted. I've already screwed this up.
That's all right.
You know what?
You've only done this a couple times.
Let's try this again. We're gonna start over. Okay, thank you. I'm gonna send out a new poll. Please, if you could, let us know. It helps us gear the content of the webinar. First question is, are you a TI subscriber? And I'm gonna launch that poll. Go ahead and let that marinate. Thank you. Some of you are answering. Appreciate it. And getting up to quorum pretty quickly. You know, I was in Jamie's webinar yesterday running the same poll. I forgot to show it, but I'll show it this time. Looks very similar to what we had yesterday, kind of a 50-50 split for the most part. So let me go ahead and yes, there's our quorum. Let me close it and perfectly. If I share that, you guys should be able to see that it is a 50-50 split. So half of you are current users, happy users, I would assume, and the other half are trying to find out some more information about what this is all about, and what all the excitement's about. Second poll, and hang on a second. The second poll is only for the current Trade Ideas subscribers, so not as many of you will reply this time, but the question is, have you added the premium? In other words, are you accessing the AI tool, which is part of our premium? So I'll go ahead and launch that poll and wait for the current subscribers to chime in. And I think I know the answer. This one's been pretty consistent, but let's wait for a quorum. We're halfway there. Appreciate you guys taking the time to click in and give us a little bit of feedback here. I'll keep it open another 10, 15 seconds. Get some more people in here. All right, thank you very much. Let me close that poll and share that poll. And again, this is very similar to what we have been seeing. The people that are using Trade Ideas are finding the value in the premium service, which includes the artificial intelligence, back testing, price alerts, and also something I'm going to show you today, something a little different that people might not be aware of, called red bar ignore, green bar ignore. But that is a premium feature, but it's kind of a stepchild, doesn't really get talked about that often. So, all right, so that sounds good. Let me hide the poll and let's get started. I'll go into present mode again here and Is that what you're seeing, Andy?
I see it. I see the
All
presentation.
right, trade of the week, August 22, right in the dead smack of World Vacation Month, the second half of October. And pretty
August.
good turnout. Oh, thank you, August. Pretty good turnout today. Thank you guys for showing up in the second half of August, which is typically for the markets the most slowest time of the year. It's probably why all the CEOs up in the Bay Area venture off to Burning Man the last week of August. There's just not a whole lot going on in the world. So we're here, we're working, and we're going to talk about some of the cool technologies of trade ideas, and additionally also trade of the week, which is the title of the webinar. But first, the requisite disclaimer: we are not registered investment advisors. We are not brokers. We have not taken all the fiduciary exams, and we don't collect fees. We are content providers. Software as a service, to be exact, is what we do here. And so everything you see today is just going to be ideas, opinions, help, question and answer, but should not be construed as investment advice. All right. Okay. Let's see. Hopefully everybody can see my screen. Somebody says they can't, but if Andy's saying he can see my screen,
I can see. Yeah.
Okay.
Should be good.
You're not alone with Trade Ideas, a popular slide. Thank you, Peter, for corroborating. One of the reasons we're growing and we have such, I think, a pretty good reputation for customer support is the onboard and the concierge service that we offer. Now, we recognize Trade Ideas is an extremely intensive program. There's a lot that can be done with it, so there is a bit of a learning curve. Now, what have we done to help people get the biggest learning curve they can in the first 30 days with us? Well, a few things. To start with, joining the free trading room with Barry Anderson. He's in here with about 500 traders every day, demonstrating Trade Ideas technology, talking about the AI calls, and helping newer traders with either trading and or Trade Ideas technical support. Additionally, the people in that room are very generous with their time as well. So if it's market hours, the live trading room is open and it's free to anybody. You don't have to be a subscriber. Just go to our website at the very top, live trading room. You can create your own username and password and join the fun. So beyond that, what we also have is one-on-one support. Now at the end, we'll give you a promo code to save 15% off your first month or your first year, which is nice. But the real nice thing is it just kind of enables you to take advantage of a 1-month trial without, using the demo mode and the delayed data and things like that. You can feel and experience the whole enchilada. But the one-on-one session is really a $99 value. We have people coming back all the time that want additional hours, and they're paying $99 for that. But as a new trader, you get the 1-hour one-on-one session free. So a lot of people take advantage of that after they sign up. Again, it's a great way for us to sit down with you for 1 hour with no distractions and focus only on you and what you want to get out of this program and software and kind of get you pointed in the right direction. And then again, we've got the webinars. So yesterday was Jamie's turn with a little help from myself. Today is myself, Trade of the Week. Tomorrow we actually have, as I teased earlier, a guest webinar. And if you want more information on that, please email info@trade-ideas.com. It's going to be my longtime good friend and excellent teacher and market technician and trader all in one, Brian Shannon, who's Alpha Trends at Alpha Trends on Twitter. He's got some good content lined up for you guys tomorrow, looking at the different time frames. And it goes hand in hand with what we talk a lot about, man and machine. We're going to talk about the machine today, but tomorrow, Brian's really going to get into the man part, the discretionary part. Know your time frames, know what you're looking at, try and make sense of this data fire hose that's coming at us. But typically on Wednesday, we'll do a question and answer demo with CEO Dan Merkin and Brad Williams. Thursday is Andy's turn to host the webinar, which is called Trading Studio. And last but not least, we have a Friday support session that's been very popular, very well received. It's for 3 hours. It's come one, come all. It's the same go-to webinar that you're experiencing right now with the questions box. We take questions, we demonstrate things live, go back and forth, and it's just an open forum. And then it's a great 3 hours, especially for somebody who just signed up and is waiting for their one-on-one session. So all that together gives a great taste in the mouth, and this is why our subscriber growth is absolutely parabolic, and we're trying to keep up with it. Real quickly, we do have a program that is not for beginners or maybe even intermediate. It's more for late intermediate advanced. It's Trade Ideas Brokerage Plus, which allows you to connect any of the custom scans or alerts that you've created. It does not allow you to hook up the AI. That's still proprietary. But if you've got a strategy and you're pretty adept with the program and you want to automate one of those alerts rather than having to turn over and log into your broker and send a trade manually, Brokerage Plus is designed to be an Autobot type of trade. So you're basically setting up your risk parameters ahead of time and then turning your back and letting the automation do its thing. But again, this is not a beginner's tool. This is an intermediate advanced tool. Okay. Yes, Peter, thank you very much. You're going to want to tune into that tomorrow. Just send info@trade-ideas, and we will send you a link to register for the Brian Shannon webinar tomorrow. All right.
Now, Steve, if they've already signed up for webinars, will they get an invite, right?
Nope. This is something different. This is something different and special.
Okay.
I'm pretty sure. Don't take my word for it. Error on the side of caution, and make sure that you can at least click into that link, because we call these guest or away webinars, where we bring in somebody for a webinar and then we will present to them, to their group at a later date. So just to be on the safe side, don't assume that because you're on the normal webinar list that you're going to get an invite to that. I could be wrong, but I'm trying to just double check and make sure that there's no holes to fall through. And as I mentioned a moment ago, and this does come from Alpha Trends himself, Brian Shannon tweeted this and I stole it, but I gave him credit. And that is a perfect segue into what the Trade Ideas platform does for people. And this is a quote from Paul Tudor Jones, one of the greatest current living traders, I think. He's been around and got a great reputation. Very quiet, though. It's hard to pin him down. But somebody got a quote out of him, and it says, "No man is better than a machine, and no machine is better than a man with a machine." So again, that kind of goes to the theme of man plus machine. You know, it's not just the Trade Ideas platform that's going to put money in people's pocket. What the Trade Ideas platform will do is try to slow down everything that's happening and help you with your methods and bring the data fire hose down to a small trickling garden hose that works best for you and your methods. So the agenda today, market recap, definitely have some things to say about that. It was kind of a slow day for Holly, but not necessarily that slow. A few observations on the AI. The trade of the week, as we'll come to, the theme is patience. And we'll go back last week and also talk about the wisdom and the thought process behind this week. And then, time permitting, I've got a couple of ideas that I think a good amount of people may not be aware of that Trade Ideas can do. So I'll just finish that sentence. Did you know that Trade Ideas can? And then I've got a couple of things to show you. I'm sure that'll be news to a few of you. And then again, time permitting, if we have any extra time, we can try and do some questions and answers, either on a stock chart or maybe a particular scan, how do I, etc. So we'll try and cram that all in here. We got 50 minutes to do so. Okay, market recap. Everybody see that? Yeah, I had to throw that in there. That's kind of what it's felt like the last couple months. If you're as old as myself and Andy, this is probably a board game you played when you were a kid called Chutes and Ladders. And as I escape out of that slide and pull up, let's say, the QQQ, for lack of a better starting point, looks a lot like Chutes and Ladders going back the last couple of months. And let's start with the SPY, and we'll get back to the Qs. Well. The spiders have, in a way, regained this trend line that was broken last week for 3 full days. So we're kind of back up here into the high area. Now, I'm not in the business of making predictions, but I feel like tomorrow I would not be surprised to see kind of a low, high-low doji day, like we did here on the downside. Downside followed by doji day. Well, this week, last week, followed by a doji day. Well, the same thing can happen on big up days too. I would not be surprised to see some petering out of the momentum that came today, which again was pretty much lack of no bad news, no follow through to the downside. But here's what I want to show you guys something now, and I'll touch on this again in the trade of the week segment. But there's a notion of market action out there. It's called distribution. And typically, we don't notice that it's distribution until it's too late, until we're looking in hindsight. But here are some ideas behind distribution. Distribution occurs typically after a nice long run where the institutions want to try and get out without making too much waves. And so what happens is on any given single day, we have just an unbelievable amount of downside volume with a giant red candle. I'm going to put my crosshairs on this first day, which was 2 Thursdays ago. And the volume on that day up in the upper right-hand corner says 120 million. Okay, so 120 million of downside on the spiders. The following Friday was the doji day, still a lot of fear and panic in the market. That was 74 million. 75 and 120, well, we're going to call that 250, roughly almost 250 million on the spiders that last week. And then the giant gap up a Monday ago, not yesterday, but we got volume of 73 million. So what's happening is we get these giant whoosh down days with incredible volume. And I mean, I know our volume bars have a little bit of improvement, and trust me, that is coming in our charts here, but you can see big volume bar on that one day. And then let's move to last Thursday. Same thing, Thursday, Friday. Big down day on Thursday. Longer range, but still, nonetheless, the body of the candle was a small doji day. Let's add up these 2 days. Okay, last Thursday, 128 million. We'll call that 130. Plus Friday was 136. So you had about 260 million shares of downside volume on Thursday and Friday. The weekend comes and goes, and a little bit of follow through Monday morning, and then a complete reversal due to lack of follow through. But look at the total volume Monday, yesterday, 66 million. And then today we've got, again, 62 million. So what essentially happened was giant down days on giant volume with a big impressive recovery in price, but the volume's not quite there. And what's that all about? So, I mean, I made a kind of a joke to some friends of mine today that if this holds up, get ready for distribution Thursday. That's just a joke. It's not a prediction. But for some odd reason, the last 2 Thursdays in a row have been just violently downside volume distribution. So kind of the same thing in the Qs. I mean, we could count these too. Let's look at last Thursday. There's 70 million on the downside, and Friday 30 million. So 130 million for Thursday, Friday on a downside drubbing. And then recovery Monday and Tuesday, 30 and 36. So, 120, 130 down, and 65 or 70 million back up. Eventually, that starts to catch notice to people. But what's happening here is that this market has been just so conditioned to buy the dip that once we have any lack of follow through whatsoever, the dip buyers do come in, but albeit they're doing it on very low volume. So that's kind of the story of what's happening here in this market. It's very volatile. It's not easy. I mean, from a professional and personal standpoint, it's not been an easy couple of weeks, but that's why I kind of felt comfortable of using that slide of chutes and ladders. The only thing we can do to kind of condition and shield ourselves from a lot of bad trades or big losses is do what we can control, which is control our share size and our entries, our trade selections. So all we can do right now is just, control our share size, knowing that we've got a lot of volatility out there. So if you're somebody who's normally trading 500 shares, maybe you want to trade 300 shares, just to kind of give yourself a little bit more roadway here, because the price action is taking up the entire road, that is for sure. Also, I mean, those that were with me 3 weeks ago, back here on this middle finger candle, I called it, this is when I started really throwing up some caution flags. And we have not gotten back to this candle really for the most part since I started throwing up caution flags. I have a bit of a lower high here. We'll see how this transposes by the end of the week. But, I think a lot of damage was done on this one day. Matter of fact, was that the same day that Amazon did that? I think it is. 727, the diamonds. Oh, it wasn't. It was a bit earlier. But I'm seeing a lot of these wicks. The spiders had a little bit of a wick themselves. They broke out to new all-time highs and then just collapsed right back into the range again on a nice breakout day that did not hold. So I started throwing up some caution flags just based on those individual candles at the time. But before we move on, the one last thing I do want to touch on is the IWM, or the Russell 2000, the 2000 stocks that we normally don't hear about. Not the Facebooks and not the Amazons and not the Netflixes and things like that. Those bigger guys, I think, and as exhibited by this chart I'm showing you here, the bigger guys are holding the market up. There's a lot of decay and a lot of destruction going on in the smaller stuff. Now, I don't have the chart, but Zero Hedge had an interesting article over the week talking about midpoint stocks that aren't basically stocks that are in the midpoint of the bell curve. They're not being crushed and they're not breaking out to new highs. What are the normal stocks that are in the index is doing? And I think IWM is a great indication of that. What that chart showed that Zero Hedge had was a complete almost breakdown of what looked like the IWM, but it wasn't. The breakdown was down around here. And so it was so close to the IWM chart that I'm going to start using this IWM chart as kind of, again, my favorite word, canary in the coal mine. Because if we get more breakdown, that's just going to kind of confirm the Zero Hedge article that says beneath the surface of, again, the Facebooks and the Amazons and the Apples, there's a lot of destruction and deterioration going on that we're not seeing. So money is flowing into the big caps, as evidenced by Jamie's webinar yesterday. If you caught that, the big caps opened up just fine, whereas yesterday the smaller caps were under pressure for a good half the day. So I'm going to now use the IWM, and I'm going to use the bottom line here for the most part. I'm going to set a price alert, and I'm just going to call it IWM breakdown. And if this thing goes off, it's going to raise another red flag to me that we are seeing more destruction and decay in the stuff that we're normally not paying attention to. Does that make sense, Andy?
It makes a lot of sense, Steve. It does, and I agree with you. I think you look over the last 60 days, and we are making lower highs and lower lows, and I agree that there's some distribution going on here. And if you detect any kind of frustration in our voice or anything, it's because being long-time traders. I mean, first of all, do you realize this is the second longest run we've had since we've been keeping records of the spiders, where we haven't had a 5% pullback.
This is now called a correction.
Yep,
just one day like
exactly.
that. Yeah.
That's what I'm saying. It's not normal. It's not normal. And I just know through experiences, when you do have some nice washouts, whether it be the start of a bear market or just a 15 or 20% correction, it kind of resets everything. New buyers come in versus what we have, which, by the way, I could see a typical, maybe a head and shoulders start developing there in the spiders. You see the left shoulder and the head, and we maybe just starting a possible. But anyway, I think it's good to flush this market out every now and then.
Creative destruction, I think they call it in the economy.
Exactly.
Yeah, where the phoenixes can come back up and build and rise from the ashes and rebuild. Yeah, so that is healthy. So in effect, this market has been very perplexing, very head scratching, and for somebody like Andy and myself who have 10,000 hours and 20 years of studying price action, not a lot of this, but some of this goofy action is uncharted territories. So we'll pick up on that when we get to the trade of the week, because the trade of the week, of course, was predicated on some additional deterioration in the market. So as you can probably tell, I'm definitely not bullish. Since this day back here, I've been throwing up caution, and the last two trade of the weeks have been defensive in nature and cautious in nature. Matter of fact, that's probably a perfect time and a reminder for me to show you this. My handy dandy sector. Okay, my watch list. Well, let me just double click this. This is what happened today. Okay, great. Steel, biotech, Qs were strong. We knew that. Retail, wonderful. But what I did is I added a 20-day range to try and see a bigger picture. And when we go back to 20-day range, these guys up here are still holding up best in a 20-day range, looking backwards. Well, what we got? Well, K-Web is China stocks. That's kind of an anomaly as far as I'm concerned. But what we've got is TLT, which is the Treasury. We've got silver. We've got gold miner juniors, gold miners regular, and gold. So looking at a 20-day snapshot, we still have a lot of defensive sectors up here for the most part, showing up on the sector radar. So I thought that was worth at least showing. Hang on one second. Let me grab the webinar link so it can be passed out to some latecomers real quick. All right, cool. The sector list. Yeah, the sector list is a very cool list. It's basically just a simple window that has no configuration to it. It's just columns. But here's where the real magic comes is you have to create a symbol list. And you have to go in and find that symbol list called ETF. And then once you've enabled it, checkbox ETF. So what I'm happy to do is to just show you that there's no configurations here. This is just a couple of columns. Change from the close, relative volume, 30-minute change, company name so you know who's who, and position and 20-day range. I'll be happy to drop those ETFs into the chat window because you have to build that yourself. So if I go to Tools, Symbol List, this is where you would create the ETF list by doing Create New Link, title it ETF, and then you'd basically be dropping these guys in there. These are the 28 or 29 or so ETFs that populate my sector watch list. So that's the hardest part, and I'll be happy to get you going on that. So if you look at the chat window, I basically opened up the chat window, and I'll do ETF list and paste. So if you're quick, you can copy and paste those into a notepad. And since I'm right here, I'm happy to also drop the link, even though there's really not much to share in terms of configurations. I'll put the configuration in there as well. But it's up to you guys to connect the dots, meaning you got to go into configuration and change on the symbol list tab. You got to enable that ETF list. So all we're seeing are ETFs only the following list. So I wasn't planning on talking about that, so I brushed through that pretty quickly. If you need help with it, you can always info@trade-ideas.com to get additional help on putting together that ETF list. All right, so let's move forward. We'll have some more thoughts on the market as we touch on the trade of the week. But real quickly, what can we glean from the AI today? Well, I always like to kind of start at the helicopter view and work downwards. What can we view in terms of directional bias? Nothing but longs were fired, even though we had 3 short strategies sitting on the bench hoping that the coach would put them in the game. But Coach Hawley did not put the shorts in the game today. That was my first observation, was the directional bias. The second observation I had was that it was kind of interesting throughout the day. Typically, you look at these spiders here, just lifting and moving all day higher. Typically, that's going to just kill it on the risk on category if we have nothing but longs open. Because remember, once Hawley exits the trade, that goes into the risk off category. And so for a long period this morning, a good 3 hours, it seems like, the risk on really wasn't catching on. If you look at the histogram here, there's about 3 hours of red and back and forth. Here's risk off, some red back and forth, and then a couple of decent trades spit out midday, and that was pretty much it, 23 cents on the risk off. But for those that maybe try and hold on to decent trades a little longer into the close, the risk on is what's calculated. And so the risk on finally caught up. But my point and my observation is that it really took its sweet time today, looking at this histogram, for the risk on trades to kind of drift higher. Specifically, we had one strategy that fired off 5 trades, and this was the 5-day bounce. These are typically oversold trades. There's an oversold trade. We have 3 consecutive candles in a row, and the AI looks for a nice bounce back. Well, considering the bounce back that we had in the spiders and the Qs today, these 5-day bounces were really underperforming. I'm kind of surprised they didn't do better, even on the all-day risk-on mode. So not a lot of oomph in the underpinnings of some of these specific stocks, even though the market gapped up. Which brings me to
Steve,
my...
I think, if you don't mind throwing in a point here, I think what we can garner from that, if you think about it, okay, these are stocks that are beaten up. They've been selling off for 5 days, and yet we had our biggest move since April in the overall averages, and these things did nothing. It just tells me that the risk appetite was not for beaten up sectors. And if you look around and you look around at the Microsofts, the Apples, the big cap, the big boys, I think that's where you're going to see, the moves that kind of reflect Amazon. There's Amazon, and I think Microsoft probably had a pretty good day. So it was going into the big cap. Yeah, those are the ones that are reflecting the same kind of chart pattern as the spiders and the Qs.
Which brings us back to what we were talking about earlier as to why I set that alert to use the IWM as a canary in the coal mine. If this thing breaks back down, the market might not be so lucky as it was yesterday, basing and then popping back higher. The final observation that I had was this is many days in a row now. Some of you may have heard it before from Jamie, myself, or Andy, but we always kind of wince a little bit when the market gaps up. When the market gaps up significantly in the Qs and spiders, the AI isn't quite certain what to do about it. And a lot of times we get a lower trade count. We don't get as many triggers or participation alerts as we might have had we just opened up with not a gap. So there's something about a gap up in the market that really throws off a lot of the filters and the strategies. And we typically don't get as many. I'm actually surprised we had as many as 11 today. But, gap up days, just for what it's worth, observationally speaking, myself, Jamie, Andy, Dan, we just happen to notice that the AI has a harder time finding statistical probabilities. Let's put it that way on gap up days. Now, not to be confused with gap down days that turn and go positive from red to green. Holly seems to like those days a lot more than the AI preferring days like today. But those were my observations for the most part at the helicopter view. Did you have anything you wanted to talk about specifically?
No, that's a good point, and we've actually kind of warned you in here at times. Be careful on the big gap up, guys, because the setups that have been back tested over the last 60 days, 30 days, whatever, where you don't have these gap ups, obviously you have a lot of filters and strategies. They all have to align, and just a gap like that can throw off all the filters that have to meet to fire off these alerts.
Let me take it one step further. I have not refreshed my screen today, guys. Look at my alerts. The cupboard is bare. All right. There was only one stock making a new 52-week high. Okay, that's great. Top reversals, stocks that take out yesterday's highs and then dip back into today, nothing. Stocks that take out yesterday's lows and bounce back into the range, nothing. A washout bounce, well, I did get one of those, but I'm not really impressed. I don't even think that. I'm not even sure how that got on there, quite honestly. That looks like, geez, I'm not even going to go there. And the trend change lubricant was pretty much dead for the whole day. AAC seems like the only thing that's trying to maybe break out of a range down here and then rely on the short float percentage of 40% to maybe move, 33% to maybe move it higher. But towards the end of the day, DLTH, which was one of the better Holly trades of the day, and if we look at the daily chart, we can kind of see one of the decision processes a trader can have if they want to go risk off and get out, or a bird in the hand, or wait for two in the bush. Well, a nice breakout of daily resistance kind of showed the way for additional possible upside when we look at the daily charts. Again, look at the daily chart first, and then look at the intraday chart. Otherwise, you're getting it backwards. You're mixing it up. Bigger picture. Start zoomed out and zoom in. So, but then Steve, at the end of the day, I noticed DLTH actually showed up on the trend change lubricant. So, I would just want to make a quick point that Holly kind of struggled on the gap up day, and a lot of my scans that I rely on too were very, very empty today. All right, go ahead.
No, I wanted to point out that DLTH. You hear us talk about, Luke, it is your destiny. Look where it closed. It finished that, filled that gap almost perfectly back there. I mean, look where it ran right up to that gap fill, and that's pretty much was the high of the day. So when we talk about, watching these points, pivot points, gap fills, it's amazing. I say over and over how many times the algos, whatever it is. I just know it's more pronounced now than what it used to be because I think because of algorithmic trading.
Algos have to be programmed.
That's right. They have to be programmed, and they're programmed to those data points. Yeah.
Yeah, so in a sense, they're not necessarily a machine. They're a man and machine.
Exactly.
And men are looking at support, resistance, pivot, R levels, what have you, gap fills. There's usually a reason. And like Andy said, a lot of times price action, the way these algos are programmed, they could be foregone conclusions. If you see, oh boy, they're heading for that gap. They probably want that gap. If you have that conversation with yourself, you're probably talking about a foregone conclusion actually happening. So, all right. With that said, let's go to the trade of the week, trade of this week. And again, I want to go back to what did we know on Friday? What did we know going into the weekend on Friday? Well, we knew that Thursday and Friday, again, in the spiders, had about 260 million shares of downside volume. Okay. Um, it's getting more and more difficult to pick a lot of longs as the longs that are working are becoming more and more selective. As we talked about, the IWM, the Russell 2000, slowly kind of coming apart. So we've been looking at defensive stocks back here. We'll get back to that one in a minute. And then again back here. So these last 2 weekends in a row, we've had to rely on the trade ideas technology at the same time, the curation aspect of it, of trying to pick something that's not going to be too aggressive if the market does continue and follow through, which it has not shown a sign of yet. But let's talk about that. So here's the quid. The QUID is basically the inverse of the Qs. And as the Qs went to lows yesterday on Monday, right here, this was pretty much the trigger point. And again, the trade of the week is not going to go short. We're assuming that a lot of people don't have the ability to go short, or they're trading out of self-directed IRAs. But what you can do is participate using SDSs for the SPYs, that's S&P, and the QID for the Qs, or options trading, exactly. So what happened here? Well, I defined this, as I usually try to do on the content of the trade of the week, as our risk section versus our reward section up here. And it doesn't take much to see graphically, visually, that we're risking at least 1 to make over 2 to 1. It's about 2 to 3, 2.3 to 1, risking 1 to make about 2.3. And where's the target? Well, it's this gap way up here, which essentially would have come into play if we do ever wind up getting a market correction. It's this gap down here. Could very well come into play. So that's the thinking on the target on the upside. But going into the weekend, we didn't have much to work on other than the fact that there were not a lot of glaring scans setting up for us. And again, the distribution that I talked about, 260 million shares in the spiders on Thursday and Friday going into the weekend on a heck of a down tape. That's the genesis of starting to get a little bit more defensive. And I even mentioned, and Andy and I used to do this all the time when we were running our mirrored swing trade account for people and subscribers that would participate with us. Sometimes when periods got to uncertainty, it was not a bad idea to maybe put a hedge in there. Maybe you're long 2 or 3 things or 4 or 5 things. Well, sometimes QID or the SDSs can act as a nice hedge. So yes, so if I technically wanted to short the Qs, you would buy the QID ETF. That is correct, Steve. Now, there's one caveat here. It's called Pro Shares Ultra Shares for a reason. This ETF is levered a little bit, okay? The SQQQ, which we laid off of, is levered 3 times. So for every percent that the Qs are going to move, the SQQ are going to move 3% in the opposite direction. The QID is levered 2 to 1. So we have a little bit of leverage here, but we need it to get working in our favor because levered ETFs over time, they start to reset over the day and the close of the weeks, and they get some what's called ETF decay. And so we necessarily don't want to stick around for that. But my main takeaway here is if we look at today's candle and we get caught up in today, it's, oh, geez, trade of the week isn't working. Well, let me just remind you that the trade of the week is not a day trade scalp. It is a position trade. And what is the biggest virtue that we can have when position trading? It's patience. So why I drew these 2 lines here was to say, hey, okay, no sweat, patience. If you're getting scared and fearful in the range here, you're probably never going to be able to overcome that. You're going to wind up changing your mind. Oh my God, they were wrong. We bounced back in. But we're only in the middle of the range here of our predefined risk, you guys. So there's no reason to panic, no reason to change your mind. Just sit to risk 1, to hopefully make 2.3 on the upside. That's the idea over and over, rinse, repeat of position trading. My point was, if you start making decisions on today's red candle here in the QID and the QID and bail, well, how are you going to feel tomorrow if it comes down and then reverses and then breaks out next week? You're gonna yell at yourself for breaking your rules. So I don't get scared. I don't get concerned until we start getting down here near the stop level. I would rather not see this, but this is normal activity of what we got. I mean, I can't determine what the market's going to do, but I have to accept what it's doing, even if it wants to bounce on half of the volume that it sold off on. Okay, so be it. We got to work with the market we have. But the point is if you're jumping out prematurely on position trades where you have predefined your risk, this zone, and predefined your reward, which would be this zone, it's going to be hard to stay true and tried to your game plan, because this is where a typical day of emotions can come in and just throw everything to the wind and say, forget it, I'm out. And, maybe it's the right move, maybe it isn't. But in the long run, I've found that patience and not getting too upset over a move like this is worth not getting too upset over, for lack of a better term.
Mm-hmm.
So patience is a virtue. There's nothing to fear until we get down here to this level. And then if it stops us out, well, then look what's happening here. We have 3 higher lows in the quid. If we go to the Qs, we've got 3 lower highs in the Qs. Boom, boom, boom. So essentially I'm saying on the quid, if we get below or above, below, if we get below this third little wick down here, then chances are it's a foregone conclusion. The market wants to rip to all-time highs again, which is basically this level right here. So if we get back above in the Qs, above this wick right here on this day, that's where we're going to throw the towel in and say, okay, we were wrong. Better to cut our losses than move the goalposts and risk another point against us. That being said, the week prior, again, the spiders, it was this day, Thursday and Friday, barely holding onto our trend line. So again, I refer you back to the 20-day sector list of the ETFs, still showing GDX and gold and silver up here for the most part on a 20-day relative strength. Looking at the GDX, it's nothing as concerning as what the quid did today. It's just kind of basically flagging here 10 cents below the entry point, which was 23.22 or 23.23, I can't recall. Spent a couple days in the money, but we're just kind of waffling back and forth. A nice little inside day. We didn't take out yesterday's highs nor its lows, so it's kind of consolidating. Once again, patience. There's nothing to get concerned about here unless it starts to meander back down towards our stop loss point. So the takeaway is the last 2 weeks of the trade of the week have been very defensive in nature. And the primary reason is a lot of the distribution that we've been seeing in the Qs and spiders. If I'm proven wrong and we jack back up to all-time highs, then I'll take down the caution flag. But I'm still flying the caution flag based on some of the candle wicks that I saw on the diamonds back on this day, the spider back on this day, and then, of course, adding up these down days of volume with just miraculous lighter than feather volume bounce back up. So we'll see what it brings. And lastly, again, I'm not into making predictions, but I wouldn't be surprised if we see a small doji day tomorrow. Typically that happens after a big candle, either up or down. All right, enough of trade of the week. And unless you want to add anything, Andy?
No, you covered it really well. No, that's...
All right, well, since we've got the spiders up here on the 15-minute, I think I actually like the Qs as a better example. I want to move forward to the next segment of our discussion today, which is, did you know that trade ideas can ... Well, one of the first things I want to show you is if you are a premium subscriber, you may have heard something alluded to called advanced windows. And people often ask, what's an advanced window? Well, we have a pattern recognition, which is kind of separate from the traditional configuration. It was done in a custom way from our developers. And if you are a premium subscriber, you can access it right here from the new file. Premium, RBI and GBI. What does that stand for? Red bar ignored on the 5-minute, red bar ignored on the 15-minute, red bar ignored on the 30. These are all 3 bullish trend continuation patterns. GBI, green bar ignored, 5, 15, and 30. These would be bearish patterns. In other words, many red candles with a green bar in there, and then the green bar is ignored. So what does a red bar on the 15 look like? Well, I don't have this alert up. It's a day trading alert. But for those that might be curious and feel compelled to investigate this pattern recognition of a trend continuation, look no further than the Qs here today. This would have triggered, based on the parameters, a red bar ignore. So we need at least 3 green bars on the 15-minute candle. Well, there's 1, 2, 3. We got those. And then if a red bar comes in after a minimum of 3 green candles, or maybe it's even 4, I can't recall.
It's four. It's
4,
four.
thank you. Yeah, that's what I thought.
Mm-hmm.
So here's a red candle. Okay, that starts to trigger the sequence of the red bar ignore, green bar ignore alert watching. And if the trade, once that red bar closes and we've moved on to a new 15-minute candle, if the price trades above that red bar, we're going to get an alert, and it's going to pop up. And again, the way in which you access those are right here. Red bar ignore, green bar ignore. So if I basically had red bar ignore 15, it would show up on here. And all you got to do is just recognize it and look at the patterns, look at the chart, and see if it's something you want to participate in. But typically, what this alert shows us and what it did today is it shows continuation, continued follow through. And I like to see those red bar ignores early in the day. So on a 15-minute chart, you're really not going to see your first alert until 5, 15, 30, 45, 60 minutes, or for the most part. So that's kind of the sweet spot. Maybe 1 hour after the open to an hour and a half, or 2 hours after the open. The red bar ignore can be an interesting pattern recognition for those that are curious and have the premiums. All right. So if you weren't aware of that tool, we have that tool. And I don't have an example of green bar ignore, but at some point when the market sells off, I'm sure there will be some green bar ignores popping in there as well.
Can I add something here, Steve?
Yep.
Yeah, he kind of referred to it as a stepchild earlier, but and yes, a lot of us, we get caught up in the whole game and what everything else is doing and all the alerts, the cool alerts we created. But there's several traders out there that use this very effectively, and I would really encourage in markets like this, if you're having a tough time and you have premium, take a look at that, because it's a strategy where your entry is defined and your exit is defined. Because what you're going to do with this is once it takes out and you get that alert above that red bar, there's your entry. And what I would do is just use obviously the low of the red bar as my stop. So you can really. Yep.
Just so you can kind of see
go.
what Andy's talking about here. It's basically a bar reversal strategy. And the bar reversal strategies are being served up via this particular alert. And, the tighter the range, the better on the red candle, because it just gives you a tighter defined downside. So that's ideally. This is an ideal chart of what the red bars ignore would look like. And to answer Steve D's question, yes, I prefer the 15 versus the 5 or the 30, which is the other option. The 5 is just a little bit too noisy for me, and you guys will hardly ever even see me using 5-minute charts. I like to use 15-minute charts with no pre-market data, so I can quickly kind of go back and string the days together and see how they look in my mind. All right. So that's something that you may not have been aware of that we have. Red bar ignore, green bar ignore. And yes, you are correct, David. Barry was one of the first people in the live trading room to bring this out and showcase it and use it in his method, and got a lot of people interested in that as well. All right. What's the second thing? Here's something that might be interesting that maybe you didn't know. A lot of you have seen me talk about my top list, Squeeze Me. Which requires man and machine looking at the alerts, setting price alerts, and trying to find stocks that are going to 52-week highs with a high short float. But still, you can see you got to go through the drill here of looking at the individual names and then finding something that looks interesting. So we cannot backtest a T window. You'll notice I right click and there's no option to backtest a T window. But we can backtest an A window. So a lot of times we ourselves, and we also hear other people say, hey, I've got something in the top list that I'm liking, but I really want to backtest it. How can I migrate this strategy to maybe an A window? And I'm going to show you how to do that real simply. Of course, you can just copy all the filters, but that takes a lot of time and effort. And we want to try and make things simple and efficient over here for people. So you may have noticed we have something in the right click menu that's called Collaborate. Well, before we had the cloud, we used a similar function called Collaborate, which is essentially just grabbing all of the filters in the code sets for those filters and creating a code string for it. So watch what happens here. So I go to the source window, which is, it could be any top list window that you like. We'll go ahead and we'll pick Collaborate, and it's kind of like the save to cloud thing, copy. Okay, now I've copied that to my clipboard. So the next thing I need to do is create a new alert window. Now, what I'm going to do is a lot of times the alert windows pop up with the old stuff already in there. I'm just going to go ahead and launch it. because I need to have a alert window open to receive the collaboration and change everything up. So disregard everything that's in there at the moment. It's not what we're trying to do. We're going to go right click in this new target window and also collaborate. But this time we're going to paste. All of a sudden we've got a complete different filter set here. So we're halfway home. All we've done, if we look at configure, is transposed these filters over to our A window. But you'll notice this thing here called a heartbeat, which is basically letting us know that there has been no algorithm or no event assigned to trigger this alert. So we got to go back and find something that makes sense with that. Well, in the case of Squeeze 52, this is exactly what I did. I collaborated all of my filters for the most part. I've probably tweaked some of them since, but the genesis of this alert was collaborating my filters from the Squeeze Me and then just coming in and doing a new high. And in this case, we're qualifying the new high as a 365-day high. And you can see by the description there that is going to be equal to a new 52-week high. So when I click OK, well, now our summary, we have a new high, we have an alert, and because we have this alert, we're going to get everything in real time, price stamp and timestamp. And those are the data points we need to go back and now backtest strategy. So hopefully that's of value to somebody out there. Real quick again.
I'm sure it is.
Take the top list, right click, collaborate, copy all, and then go ahead and make yourself a new alert window and then pop everything inside the new alert window using the collaborate paste function. Okay, so if you weren't aware on how to do that, that's a real easy way to do that. I think I hit collaborate.
You did, yeah.
Do it correctly. I think I hit copy instead of paste all. Yeah, I hit copy. So that would be a paste. All right, there's one more thing I want to share with people that may not be aware of in the how do I segment here. And that's going to be going to our website. Going to the website under support. This is the support page. And I basically just opened and closed this traders area window here. But this is called stocks like this. So let's click into that. Now, I really want to preempt this by saying this is not a perfect penny to penny, filter to filter reverse engineering deal here. In other words, I'm not going to find the perfect scan every time, but what it's going to do is it's going to point me in the right direction. So we need an example. What do you think? Do you have a good example of what we might want to look at today of a stock and time of day? I know I'm putting you on the spot.
Yeah, you are. But let's maybe find something. Maybe do your wing that was coming through your. Wasn't that coming through your Squeeze 52?
Okay, so wing was coming through Squeeze 52 today. Let's see here. It basically gapped up and just kind of made some higher.
Maybe right there. Maybe right there when it took out that range high in the morning. Maybe do that time. Right, one more
right
over.
Oh,
yeah,
right there. Whoops. Gosh darn it. Let's do it right here.
The big green one.
Well, here's the top of the open right there.
Right.
You're talking about this
there you
one?
Go. Yep.
Okay.
No, the longest green one. But go ahead.
The longest green one. I am confused.
The breakout where it finally broke through highs. You probably have to hone your. You may have to go to a 5-minute.
35, 55. Okay, right there. I see it. Okay. Let's do this. So let's go to 5-minute because I think that's probably a better example. We'll go to 5-minute. And there it is right there. I believe that's what you're looking at. So if you're looking in reverse and saying, gosh, I sure wish I could find setups that looked like this, but what were they doing prior to? So let's look at the time of day. 8:22 is the date. And the time of day was 8:20, so we have to superimpose that to East Coast 11:20. All right, so let's watch this. So we take symbols, stocks like this. Symbol, wing. Tuesday the 22nd is good. The time, what did I say, 11:20?
11:20.
11:20. And we're going to use the 5-minute duration. So once I click submit, what it's returning to me is these are the different algorithms or events that we just talked about. You have to have an event to trigger something. And then these are kind of what the filters look like. So by no means am I saying that this is a perfect way to re-engineer, reverse engineer, and find exactly what you're looking for and have this thing spit out the exact setting. No, it's not going to spit out the exact setting, but what it is going to spit out, well, this is interesting. It crossed above resistance, confirmed. That could be an interesting alert that we could focus on.
Mm-hmm.
It also was doing an NR7 on a 5-minute range.
Mm-hmm.
So, we can come back and try and see what the system was triggering at the time of interest. But again, I mean, it's very easy to go down the rabbit hole. Basically what I just like to do is just try to get a feel for what some of the possible events were at that time. And the two that kind of catch my mind might be an NR7 at 5 minutes or a crossing above resistance. Same thing down here. We even have an NR7 and a 10-minute. So it was catching that consolidation and then breakout. The filters for themselves can be very extensive, but these would be what the filter settings would show you. So if you're interested in certain things, it's going to show you average number of shares. Interesting to note that. Relative volume, it broke above at least at 1.48, so there's a great example of how relative volume may be needed for stocks breaking through 52-week highs and things like that. So once again, it's called Stocks Like This. It's a way to kind of get a head start and at least a foundational point to start with for a chart that you're looking at by simply typing in the symbol, the time, East Coast, and the date, and it'll spit back some ideas which you could maybe start with to work with. And again, it's in the support tab, support menu of our Trade-Ideas website. All right. So again, before I kind of wrap up here, if any of you do want to attend the webinar tomorrow with Brian Shannon, please send an email request, info@trade-ideas, and we'll send you that landing page just to double check that you guys are included on that. So I thank you for your time. I'm going to just walk us out here where Scott normally would. Just to remind you, the Trade Ideas podcast is every Friday after the market close. Give it an hour or two and then do a search for Trade Ideas podcast on your favorite podcast library, iTunes or wherever that may be. Always some interesting topics. Trade Ideas promo code, as promised. For those of you that initially told us you're not a current subscriber, and hopefully you saw some things today that are interesting to you, and you recall that we give you the one-on-one personalized session for 1 hour to really get you going in the right direction. Very steep learning curve in that. You can save 15% off your first month or your first year of premium or standard using the promo code at checkout, Future is Now, and that has to be in all caps. I will point out also on the webinar toolbar here, go to webinar, there's a handouts section. If you click the triangle on the handouts section, you can basically grab and download a PDF, which is going to have all that stuff on here in case you forgot what the promo code might be or what some of the premium or standard features might be. Any questions? Please, the best place to triage any general question is the main info@trade-ideas.com. Like I said, if you're looking for the invite for Brian Shannon's tomorrow's webinar, myself, you can reach me directly at Steve@Trade Ideas. Same with Andy at Trade-Ideas. You can follow myself on Twitter at TodayTrader. Dan Merkin, the CEO, is at Trade-Ideas1. The phone number really is not advisable unless you have an accounting question, and more than likely you'll get a return call on your accounting question. If you have any ideas or need technical support or quick help, on our main web page, we do have this live chat support. You can always reach us there as well during market hours for the most part. All right. Very good. Let me just see if there's anything else. No, that
Mike,
will do
let me
it.
tell Mike, because he did have a question about the automation.
Okay.
Yes, Mike, that's in beta phase, and we only have limited resources to that. Oh, he left.
You left. we tried to answer your question, Mike.
Yeah.
Yeah. Can you talk more
Oh, well.
about the automation capabilities? We are not up to speed on supporting the Brokerage Plus. That's more of a behind the scenes in our developers department. So pretty much any question that comes through regarding auto bot trading using IB and Trade Ideas is going to get routed back to the developers anyway. So there's not a whole lot we can do on answering your questions here at the moment. All right. That should do it. Appreciate those of you stuck around. And please tune in tomorrow for Brian Shannon's webinar. Should be a good one. I'll be there co-hosting and probably even learning a few things as well. All right, everybody. Thanks
All
for
right.
showing up, and we will see you next time.